Good afternoon, everyone, and welcome to the Edge Live webinar, the first edition for the year 2023. For those of you who joined on time, that is quite commendable. So if it's your first time of joining the webinar, this is a business webinar, which we have every month. And on here, we invite professionals to come discuss with us business-related topics that concerns you and I. And the discussion promises to be very interesting. So we have professionals from different business backgrounds to come on here and discuss with us. And this month, we'll be looking at a business topic, business strategy, how financial statements can help grow your business. Before we get into the program proper, I just want to repeat some of the housekeeping rules. So the program is a discussion. We have a professional come on here, discuss with us, present to us, and after that, we have the opportunity to ask questions, live questions, and get answers right on the program. And to really enjoy that, we would encourage you to make use of the chat box. So if you have contributions, just go to the chat box and then please do that. Type your contributions. If you have questions, you can also go to the chat box and also ask questions. And then we pick it up and we'll record them so that you can get response to your questions. Also, we would want you to pay rapt attention as the discussion goes on. And of course, at the end of the program, the recording will be made available on our YouTube page so that you can always go back there to watch. But we don't want to miss the interaction that will be going around during the discussion. If you want to contribute to the discussion, the co-host and I can unmute you so that you can do that, or you can just drop your comments in the chat and we pick it up from there. So without wasting much time, I want to introduce our professional for today, who is a fellow of the Institute of Chartered Accountants in the country, Nigeria, in person of Mr. Abideen. So Mr. Abideen, you're welcome. You can unmute your mic. I think you're co-host now, so that you can introduce yourself and go ahead with your presentation.
Thank you, Mr. Ojobi also.
Yes, you're right.
Okay.
Or you can come Abiola for this program.
Mr. Abiola, yeah.
Yes.
Can you see it now?
Yes, very clear. We can see your screen.
So, okay. Good afternoon, everyone. My name is Abideen Adeni. Today on this edition of webinar, we are discussing about business strategy and how financial statements can be of help to grow your business. Firstly, this is my profile. I'm a fellow member of Chartered Accountant of Nigeria, and I have more than 14 years experience in different areas of accounting and finance. In relation to financial data analytics, public finance, internal audit, internal control, supply chain task management, financial modeling, budgeting and forecasting, and equally capacity building. I'm currently providing a service to 3 CFOs on strategic finance partner. So I can be reached on the following social media and my phone number. So this today's agenda, we are going to look at how, as a business owner or an entrepreneur can determine their financial stability of their business. Equally, how you can use financial statements as a tool for business growth. Also, how you can use financial statement to assess business funding. Equally, what are the requirements to get that funding? Number 5, what are the challenges? And how can we overcome those challenges of preparing or presenting a clear accounting statement, whether you are a small or large organization? Number 6, automated processes. How can you automate your processes, your business processes, your business activities, and financial activities? Number 7, we are going to look at how can you manage all your businesses, your business processes in one place. Lastly, we are going to look at some business case study. We all knew that we are in a volatile environment presently, where business conditions are changing every now and then. And there is highly risk for business owner to be able to predict their business performance accurately. So business owners need to be more strategic and as well as be more agile about their approaches and way of preparing their bookkeeping and accounts. And that is why BizEdge came into being, if I may say. So business owners need to adapt to the ever-changing business environment in order for them to be successful in their business. One of the ways they can get this to be done is they can be examine or analyze or determine their financial stability. What I mean is the financial stability of your business. The mere fact that your company is profitable does not really imply stability, because stability is the capacity to survive a short-term problem or a shock, such as a drop in your sales, a shortage in your funding, and maybe you even lose the game changer among your staff, or you lose one of your customers. But you can easily establish whether or not your organization is financially stable by examining your cash flow, as well as some scenarios. But we must not forget that the ultimate objective of every business is to maximize profits. Even though profit stability means that the profit is doing fine and is in a stable form. So profit stability comes only when there are enough sales. When there are enough sales. So, and it's enhancing your profit level. And as a result of that, profit stability is a good sign of business entity. It shows that you are a going concern. That means that your business is not going to crush or fail in the few time. So, but how can you as a business owner examine your financial stability? One of it is cost structure. What I mean by cost structure is a combination of fixed and variable costs. The question now is, which cost is the best? Is it a high variable costs and low fixed costs? Or is it a combination of high fixed costs and low variable costs that will be best for my own business? So there's no single answer to this, because it depends on the nature of your business and some certain circumstances. So we'll look at this case study. There is a company S and Y. They are undertaking an agricultural activities. Both companies are on the same scale of sales, 100,000, 100,000. But company S is heavily depending on workers. That is why you could see that it has a 65% of its own variable expenses, while that of company Y has a few labor and concentrate more on mechanization. And that's why you could see that for its own fixed expenses, we're having 55,000 for his own expenses. The question can now be arise that which one is the best? Like I said, it depends on so many factors. One of the factors is long-run trend in your sales. How sales were moving in your own businesses. Secondly, year-to-year fluctuation in your sales level. Were you able to measure or compare your sales from between 2021 and 2022? Some business owners they do not have a record to even show or to even use to compare. Not only to say that they have an accurate record of their businesses. Thirdly, the attitude of the owners of the business towards risk. Are you a risk taker, or you are a risk averse? You're normally afraid of taking risk. So on this case study, if the sales are expected to be above that 100,000 USD in the future, then company Y probably has the better cost structure because it has the highest contribution margin, which is 65%, compared to company S that has 35%. Let's look at this, the second case study, to show that analysis. We can see now the two companies has a 10% increase in their total sales. The more sales that they are having, the more laborers or more wages that company S will be required in order to meet up the demand. So it has an increase in its own variable expenses. While that of the fixed cost of company Y is fixed. So you can see that at the end of the day, it has a highest operating income because its own contribution margin is very, very high. These are one of the ways where you can measure your financial stability. You can continue dipping in, analyzing the cost structure, but because of time, we'll stop here. The second way you can analyze your financial stability of your business is cash flow budgets. Creating a cash flow budget that specifies precisely when you receive income and when you need to make payments is very, very important because cash flow budget is an estimate of all your cash receipts and cash expenditures that are expected to take place during a certain period of time. It can be monthly, bi-monthly, or quarterly, and can include non-operating income and expenditure as well as other items. This is an example of cash flow budgets, where you have your cash in hand and you have your cash receipts plus other cash injection, whether it's loan injection to your businesses, the whole fall in your cash inflows. While the cash paid out are under your rent and your other expenses. Equally, there are a lot of importance on cash flow budgets. It forces business owner to consider his annual business plans because some business owners or entrepreneurs forgot about their business plan. Immediately they kick off the business. Also, cash flow budgets will test your business plan so that determine whether you make enough, because you already have a template that you follow. You can't just be looking at, you monitor it. So it's also an estimate amount of operating credits you need for your firm to grow. And it will also show how you can repay such loans. It also gives you a benchmark to compare your actual cash flow against your budget. Lastly, it helps you communicate your business plans and credit needs to your lenders. Number 3, how long have you reviewed your customer profile? Some business owner or entrepreneur has never even reviewed their customer profile because sales is just coming. So, but immediately they are having a crush in their sales. They will not start, we need to call customer A because we need his sales. But since you have not been reviewing your customer profile, it's very, very difficult for you. Review your customer profile will determine the effect of losing a customer or two customers at once and your ability to remain in that your business. So you have to make plan in case customer A and customer B refuse to buy goods. Will I still be able to continue in this business? Definitely it will make you to have a strategic thinking about your business. It will also create a plan to reduce your reliance on one or two customers and see if you can survive without them. These are some of the factors you can look at, features you can look at in your customer review. Also, accounts receivables and collections. Some business owner started business in order for them to increase in their sales, they sell in credits. So accounts receivable is when you make sales and those your customer are yet to pay. So those are accounts receivables. But large percentage of business owners at times, because of they don't have accurate record keeping, so they look the track of some of those their customers that are yet to pay. And that is where collection comes in. So collection is an ability for you to have the debt profile of your customers and ability to follow them up and make effort to collect your money. So you can see this typography is telling us that when you make sales, you supply goods to your customer and they are still owing you is what we call account receivables. While you purchase products from your vendors and you are yet to pay them is regarded as accounts payable. Next is analyze your lines of credit. As a business owner, we at times take credits from banks or some other maybe friends. So your ability to analyze your lines of credit that in case I lose a particular lender, how is it going to affect my business? Am I still going to remain in that business or not? So it is essential to, and overdraft is part of credit, line of credit. So it's highly essential for you to analyze your line of credit. Now, we've talked about how you can determine or assess your financial stability. But now, having done this, how can financial statements serve as a tool for your business growth? In so many ways. One of it is, can you even make use of your financial statement to have access to your funding? The answer is yes. We can have access to financial funding because the answer is yes, because it will allow you, and it is crucial more than before as a business owner. So because of the aftermath of COVID and some other rising of inflations, rising the prices of raw materials. So there is no how businesses will not need access to business funding. But majority of us in Africa, we're always afraid of getting funds to plug into our businesses. But before that, you have to have a premise. One of the premises you should have before you can get funding from your investors or financial institution is that you have to frequently update your information. Detailed and frequently updating your information is highly essential because it's going to attract the new investors and as well increase your businesses. Number two, you have to complete an accurate financial data. Because if you want to borrow money from a bank or you have an angel investors, certainly an angel investor will want to see an up-to-date and complete accurate financial statement. So it is very, very important as an entrepreneur that you have an accurate financial data. If you do not have an accurate financial data, it's going to affect your having access to the funding. Number 3 is solid documentation. Most of business owner doesn't have this, but it's highly important. Having solid documentation on hand would help you get a better interest rate and lower your risk profile, because there is no how an investor will want to invest in your businesses without do what we call a due diligence. They will carry out a due diligence, going through your documentation and everything. So if you don't have such documentation, then it's going to affect your having access to your funding. What are the requirements for you to get those business funding? Your historical financial data is highly important. Income statement, balance sheet, and statement of cash flow, they are very, very key. And as well, your projected financial data. So you must be able to convince your investors that going forward the next 2-3 years, I'm going to make so amount of money. And what are the return of investments to them? Because they are not just going to invest in vain. So, and your projected income statements, your projected balance sheet, your projected cash flow statement, and your projected capital expenditure must match your funding request. For example, you are requesting for 50 million naira or $50 million, but we could not trace those $50 million to any of your projected income or balance sheet, especially your capital expenditure. Do you want to use it to purchase an equipment or to rent an office or whatsoever? So this will give an insight, additional insight to your investors. So these are very, very important. And that is why you can rely on your financial statements as a tool to grow your businesses. If you have all those information that I've said earlier, this will give you an opportunity to get a new investors. No matter whether the funding comes from your friends or your angel investors or venture capital, definitely is going to assist you to get those funding. Secondly, it will also assist you to what? To invest in the right assets. So rather than you making a business decisions, whether I should use this or I should do this. So having an accurate financial statement will definitely give you a right decisions to be making. Also, you'll be able to get loans that you need. Businesses that cannot tender their financial statements have a very slim chances of securing loan. Number 4 is it keeps you on top of your taxes. You'll be able to make provisions for your taxes, your CIT, your VAT, and some other taxes that you need to pay to the government. Also, it will assist you to make a future business plan by studying your historical trends and as well be able to at least make a future plan for your businesses. Now, some of the challenges that business owners do have is all this that you have been mentioning. How can I even go about it? These are some of the problems. So how can you now overcome those challenges? By presenting a clear account statement, either as a small business owner or a large organization. One of the problems that business owners do have, especially in Africa, is manual processes. The majority, instead of them to spend more money on a process that will make the business to be easy for them, they spend money on some other things. So out of the gap, the manual processes will affect your business is time consuming. It's time consuming. You are entering, using Excel, using this, using that. So it also leads to inaccurate financial data. And if your investors now go through your financial statement, they now see some errors, even though it's an unintentionally mistakes, once you have those errors, definitely it's going to affect your level of getting those funds easily from them, because your financial data, your financial statements are not accurate. So these are some of the challenges that business owners do face. Number 3 is those formats at times, they are junks. They are standalone solutions. So you now be thinking of how you want to link this with this, how you want to link your payroll with your financial statements, because part of the due diligence they want to, how many staff do you have, how much are you paying them, this and that. Number 4 is unsatisfactory collaborations. So lack of system to support easily can also affect your results. So the only way for you to overcome those challenges is when you automate your processes. When you automate your processes, it will really, really assist you to overcome those challenges. Now, we'll briefly talk about modernize your financing function. Modernizing the accounting role can only be achieved through the following: having a proficient information and integrated system. So when you have an integrated system, by strategically integrating your technology, a firm may eliminate silos and streamlines your business environments. So this will reduce and lower inefficiencies, maybe among your staff and the likes, automating process and controls. So in order to find efficiency and measure your productivity, so contemporary CFOs, business owners are always adopting an automation. And when this automation is being done correctly, it's lessening the monotonous and the daily work and reducing the business staff fatigues and expenditures. Equally, data and analytics for organizations. We all knew that today business requires data to act as an effective guide for both decision making of your businesses and monitoring. So advanced analytics provide executives with accurate financial information. Number 4, you can compete through a cost-effective delivery model. The financial function is best suited to offer a cost-effective delivery model through the data collected from various business operations. Because we have your staff, you have the system. The system can be integrated, so it be cost-effective. Lastly is you build internal strength by enhancing cross-functional partnership. Gone are the days when financing departments works alone. These days, with an integrated system, your sales department can easily have a click. With a click of a button, they can easily see their performance. So also, business operations department can easily see even the marketing can easily how much of costs of their campaign, the advertisement they have run. They can easily see this instead of disturbing the accounting department or finance department that we want to see our records. Number 6, visualize your financials and KPIs. When you have an integrated system, it can be easy for you to work to develop a financial mastery inside your company, even without having an accounting background. You can easily see. You can look at these examples. You can easily your gross sales. You can see your sales, your previous sales. This is your current sales. This is your budget. So once you have an integrated system or a kind of app or system like that of BizEdge, so it will be very easy for you to run your data and your dashboard easily. You can easily see the hedge debts, the cash at bank, and the likes. Number 7, you can explore a live and dynamic user interface. Now, so the only way we can bridge the gap between the manual and the automated processes is to manage all our business processes in one place. And that's one of the reasons that BizEdge, when I look at their platform, you can see is a suite of tools for growing businesses. Manage all your business operations in one place from anywhere and on any device. You can see people management is there, payroll is there, asset management is there, documentation is there, and I've mentioned about having your solid documentation earlier. Also, we have an accounting for bookkeeping and recording, also for vehicle management. So this will make your business easy and seamlessly for you. When you raise an invoice for sales, even though it's an order, when your customer make an order, you raise an invoice or quotation, it should be automatically recorded on the platform. And when they make the payment, it automatically, you enter the payment, it automatically show that your customer have made a payment for this particular sales. And if they are not making payment for that particular sale, it automatically show that customer A is COing you. But if you don't make use of such a platform, you may easily forget about the customer that are owing you. So let's maybe look at this case study. It's a part of data analytics. If you have a system, integrated system, you can easily come out with this type of a dashboard. These account receivables, aging reports. You can easily automate it. Okay, I want to check for a particular period of time. You can see for this period on the July 5th, 2019, the number of outstanding invoices that your business is having is 699. So it make it easy for you because you already have all your own updated record, which maybe a financial analyst or your auditors or your financial accountant can easily use to make this kind of dashboard. Equally, you can easily see the total amount outstanding. Your money that is outside is 4.3 million. You can also have a drill down that who is having large, how many customers, or for how many days. You can see. We have 53.4% of customers that are still owing you more than 90 days. So you can equally have this kind of case study. Equally, let's look at another case study. This is the revenue and margin analysis. You may want to know how your online business is performing by just a click. So you can see, okay, with my online businesses, okay, I'm having a 40% gross margin in my businesses. You may now want to check. You can have a dig through. So you can see this narration said in May, the gross margin was 41.9%, with a difference of 3.5% over that of last month. You can now say, okay, what are the causes for having these higher sales as a business owner, so that you can also improve more on it, or you can concentrate in that line of businesses in order for you to make more sales. So you can have such a click of your or record of your businesses with this kind of dashboard when your business has been easily automated. But if it is manual, it may be done, but it will take time, and the manual might have mistakes, may not be accurate. Definitely, if they are not accurate, there is no way you can make a good and accurate decision about your businesses. That's one of the purposes of having we can also look at the last case study. This one is talking about revenue and price simulation, whereby you may want to see. Let's see. Okay. Okay. You may want to see how if there is increase in price, in cost of your business of goods. Maybe there is, as a result of inflation, you have yes, okay, fine. Let's look at only January. Yes, this is your January sales. Assuming that this is your January sales, so you have your operating income here is $38,000. These scenarios is what we assist you to test check. Now, let's assume you have 10% increase in your product costs as a result of inflation. So how is it going to affect your business? So this is 10% increase in your product costs. So you can easily see that when there's increase in your product costs, it's going to affect your business. You can see you are having a loss of 38.9% loss. So this will guide you that, okay, you need to increase your price of your products. It will assist you. Then you can now come here to say, okay, if I increase the price of my product by 10%, what is it going to be the results? Let's look at it. Okay, so if you increase the price of your business products by 10%, it's showing that you are going to make a profit of what? 28.5%. But having increased your price to 10%, it reduces your sales. So you can ask, okay, let me see if I test 5% increase in order for me to enter the market. Even though if others increase their own by 10%, let me see if I increase just with 5%, whether I'm going to make profits. It's showing now that you are still not going to make profits. You are going to have a loss of what? 5.2%. Can I say, okay, can I do 7%? Can I do 7%? All these are just to show that if you have an accurate figure or financial data of your businesses, you can do a lot with it. Okay, let's continue. But it's just a way to tell you that if you have an accurate data, you can do a lot with it. The next is, with all this integrated system in place, and you are able to draw a dashboard in relation to revenue and a gross margin, or a revenue and price analysis dashboard, it will be easy for you to understand your customers. You will understand your customers very well. Having reviewed your customers and do all sorts of analysis that we have carried out. And equally, this will be based on their historical transaction and behavior. But let's come of it. If you don't have good record of your customers, how do you want to carry out this review? How do you want to carry them out? How do you want to know? You just be basing your understanding of your customer by assumptions or by word of what your sales reps are giving you. Equally, when you understand the behavior of your customer, it will enable you to know how loyal they are to your brand, what products they can buy, and how frequently they can buy those products. And if they have a preference for visiting the store or buying from online stores, so you can easily know. So this will guide you a lot, and automatically it's going to increase your sales. Equally, having an automated or automating all your processes is highly essential to the growth and acquisition of customers, either for a new business or an established business. Equally, you can repeat this same task as many times as you can, as you want, with just a few clicks with the tools like BizEdge, so you don't have to go to different places to meet the best people you want to work with. Not only are those tools are useful, but are equally inexpensive and at the same time free for businesses just starting out or looking to expanding your businesses. So with this little presentation, I believe you can ask different questions either from me or as well from BizEdge, the host, in order for you to know more about how you can make use of BizEdge system for your businesses. Thank you and welcome.
Thank you very much, Mr. Abideen. You have done more than enough justice to the topic of today. We are looking at financial statements, how it can help grow your business. This is a topic under business strategy. So of course, it's very important that we know all of this. This webinar is brought to you by BizEdge, a all-in-one business management tool, as Mr. Abideen has showed you on the screen, where you can get to manage your people, payroll, accounting, and even inventory of your business. Now it's time for questions, and we want us to ask our questions freely. So if you have questions, please put them in the chat box. And if you want to maybe ask these questions vocally, you can just signify by raising your hand, and I would unmute you from here. I will ask you to unmute. So now it's time for us to take questions. So you can start putting your questions in the chat box, and I'll be reading them from here for our guest today.
Hello?
Yes, okay. Did you get the question?
No, sorry.
Okay, the question is, what would investors look at in a financial statement? So let's say company XYZ wants to need investors to pull in. They have been bootstrapping, self-funded for a while now, and they need people to, investors to come in. So what do you think investors will be looking at once this company presents its financial statement? So for us, as maybe accountants, because I know we have accountants here, we have business owners here, what would they be looking, what should we be presenting in front of our investors?
Just like I said, the three main financial statements, you need to prepare it very well, because they are going to look at your net profits, which is the bottom line. As well, they will go to your cash flow statements. You want to see the in and out of how the cash is going to be moving. You want to see what you want to use the cash for. I mentioned in my presentation that your projected cash capital expenditure is also very, very important. What do you want to use the money requested, you are requesting for? What do you want to use it for? So they pay more attention to your cash flow, and as well look at your net profits. At the same time, go to your balance sheet. Look at your balance sheet, the net worth of the business, the net assets. They will look at it, and they want to see your projected balance sheet as well. So the three are very, very core, but those are the main thing that they want to look at. And some of them may also want to look at your appraiser in terms of return on investment. Return on investment, they want to look at return on investment, either by using NPV or by using a payback period. So some of them specify the kind of appraiser tools they want, either a payback period, if it is a grant, or if it is a redeemable or loans that you are going to be paying. You want to look at your schedules. How do you want to repay the loan if it is a loan? So they want you to give them amortization schedule. as well. So some of them, if it's a loan, a bank loan, so they will request for your amortization schedule to know how you are going to be repaying those loans.
Okay, thank you very much for that answer. I think that one is that's quite clear. We have a question from some of our attendees here. This one says, this is from Realmans GC, and this person is asking, how can non-accounting business owners benefit from automated financial statements? So somebody who is the business owner but no accounting background whatsoever, how can such person benefit from automation of financial statements? And a follow-up question is it easy to do? That is, can this business owner do it himself or herself?
Okay. Like BizEdge, though I have not been able to enter the BizEdge platform on the accounting side, but some of the automation that I know is you have access of making use of their invoice. At least as a business owner, you have your customers. At times you type customer, Mr. So buys so worth of goods, you record it. Just like, I don't know if the person has made use of some other app before. So once you register, you raise your invoice, it will automatically integrated, captured in the name, the number of quantity of products, or maybe a service you have delivered to that customers. So by the time you enter it, it's going to show. And if you have delivered the goods to that customer, it's also going to show. Just like what Mr. Abiola said the other time, that is also, the BizEdge is also for inventory management. Definitely is going to capture your quantity of products. So when you load in your inventory, let's say, for example, you buy goods worth of 100 quantity, you load it on the apps. If you are making sales from it, automatically it's going to be reducing. So there's going to be integrated system, how many you have sold, which customer bought those goods. So it's very simple, and I believe they will have a demo. They will have a demo also so that those that have interest can also have an access to.
All right, thank you very much, Mr. Abideen. So to add further to his points, he's very correct. So BizEdge, once you head on to the website, you can sign up, create an account, and you have a very sweet, lovely environment to play with. Demo data for you to practice to see how the app works. And if you want a one-on-one demo, you can just request for a demo on the website, www.bizedgeapp.com, and someone is ready to schedule a demo with you on how to go ahead with using the app. If you are not satisfied with the demo you have seen on YouTube, or the one you watch when you downloaded the app, or when you signed up the app. So we have dedicated personnel who would sit down with you and show you how to go about this. Another question we have from an attendee here is, what about small businesses? This is from Balogun. What about a business that is just starting out? Because you said for you to get grants or loans, you need to present your financial statement. But for a business that is just about to start, what can they present?
Okay. You have to present your business plan. And your business plan comprises of so many things. Your marketing survey, market development, your pricing strategies, your training, and your knowledge about that product. Because your investor wouldn't want to give you funds if you don't have much knowledge about that product. So they want to know. So you have to convince them that, yes, you have knowledge about this product. You have started it on a small scale before, but you want to expand. So you must be able to convince them. And lastly, your financial projection must be there. So it's not only financial statements. Your marketing development, pricing strategy, marketing survey, how do you want to entrance to the market? What are your needs? Who are your customers, your potential customers? So you may be able to list all those things in your business plan. So what we are going to use is business plan. Yeah.
Okay. So thank you very much, sir, for that reply. Let's take question from Donatus. The question is, bank does not just fund business based on financial statement alone. What other factors do they consider? Because this has happened. Yes, I agree with what he's saying. You submit, you go to the bank and you drop the whole bundle of paper and all. What other factors do they consider?
You know, our banking system in Nigeria, even though they were created at least to assist the business owners for funding, but these days it's not really encouraging. So there are a lot of requirements. Firstly, your business must be registered. You have to register your business with CAC. So this will allow them to know whether it's an existing business or somebody that will just collect loan and run away. So they want to, because this is an investor's money, so they don't want to just dash it out and looking for you. So you also ask for guarantor. You must be able to have a guarantor, either an asset that they will use as a guarantee before they give you out. So it's not just only financial statement, just like what you said. But your business will be registered, must have a guarantor, either a building or assets. Wherefore, if you default, they can easily lay on those things. So those are some of, we have other requirements, like those are what I have mentioned. Your cash flow will also be required, and some other due diligence. Depends on the nature of your businesses.
Okay, thank you very much for that answer. Another question is, this is from Molara. I think she runs a small school, and the school's income cannot manage the staff for a good term. So how can she go about getting funding? Does she have to, what does she need to do? I think that's what she's trying to ask. She runs a small school. Okay, she runs a small school.
A small school. Oh, okay.
Yes, school, yes. So, and the money income is not enough to manage the staff for a good term. So how can she go about that to break even?
Yeah, well, if I said you should approach a bank, you may not get the loan. You may not easily get it, because those requirements, if you don't meet them up, they will not give you the loan. One of the ways is seeking for partnership. But we Africans, we don't like partners with people. Some have bad experience about it, it's fine, but for schools, majorly, partnership is very, if you want to expand, you can partner or do what you call private placements. Private placements in the form of looking for investors. Those are close to you that want to invest. It's also a form of partnership, but you are going to write a partnership deed or write the prospectus. Even though it's a private placement, you are still going to write a little bit prospectus, showing them that going forward, this is what I'll make. If I do this, I'm going to make this. You should be able to convince them, because nobody wants to invest their money where they won't be able to make anything. Even though schools projects it's not a quick money making. It's a long time. It can take you 5 years. before you start recouping. So you should let them know. So you should meet your either financial analyst, your accountant, to draw some of those things for you, because it will base its own analysis on the historical record you're having, the number of pupils, and there are other ways by doing campaign and in your area about your schools, by going to social media publications, doing what we call video avatars for campaigning. It will increase your awareness about your schools. Painting your schools to be attractive also as well can increase the number of pupils that will come to your school. Once that one is increased, definitely your business is going to be increased. Thank you.
Thank you very much for helping answer this question. Then I think our time is fast spent, but we can just squeeze in one more question. And the question is, can financial statements replace business plan when one is seeking for a grant?
No, it cannot. Financial statement is just a subset of your business plan. So we have what we call financial highlights. After preparing your financial statement, what you need to extract from your financial statement is maybe just a year historical record and 2 to 3 years of projection. 2 to 3 years, at least 3 years projection. So those are the things that you just extract and put in your financial highlights. And we have other appraisals like return on investment, you put it there for them to know. So financial statement does not replace your business plan. So your business plan is very, very comprehensive.
Okay, so that means in the business plan, this person can put in like a summary of his financial statements.
Yes, a summary. Right. Thank you.
Okay, thank you very much, Mr. Abideen. We really appreciate the 1 hour. If we are to give you more than that, I know you would you are ready to spend that much time, and those with us are also ready to continue asking questions. But this is where we draw the curtain for today. And then please, Mr. Abideen is very sociable, so you can reach him on LinkedIn. So he's very active on LinkedIn. You come across his posts, you can reach him on LinkedIn to ask some of your questions. And if you have questions, please, you can also submit them to our email address, hello@bizedgeapp.com, and we would make sure that you get answers to your questions. So this is open to those who attended the webinar today. So please ask your questions, whatever question it is, whatever assistance you need, and the right direction will be rendered to you. So courtesy of BizEdge. So thank you very much, Mr. Abideen, for coming on the program. We're looking forward to having you in future in any of our events so we can follow up on this discussion. Thank you so much. To those yes, you're welcome, sir. To those who participated, we enjoyed the questions that you asked. We are also social on we also online too. That's we on social media, on Instagram, on Twitter, and also on LinkedIn. So please hit at us with your questions and follow our activities, and don't miss the next month's webinar that will be coming up. Thank you very much for joining in, and then see you next month.
Thank you.
Bye.